Hey everyone, welcome to February, and I want you to know I deliberately waited to do this video until February 4th because I wanted to see what was going to happen with the tariffs. And the reason why is because, as you well know, it's been the talk of the town, it's been the talk of all month in January, and even when I went to the CREB forecast breakfast, they said, hey, I'm giving you these great predictions. It was done by Anne-Marie Laurie, and she's fantastic at what she does, and we're going to get into that in this video on what the predictions are. But I just needed to see if it looked like the tariffs are going to happen, and I'm happy to see that that has been delayed for at least a month, and also happy that even on oil and gas it was 10%, and I think there's a good chance that maybe some things will get worked out, and maybe we won't even see tariffs at all. I think we can all hope for that, but I have a lot more confidence doing this video knowing that there isn't any tariffs right now and won't be for at least 30 days, and like I said, hopefully we won't see anything past that, which means as I get into this video and show you what happened in January and the predictions of what our chief economist is predicting for the year, that maybe these predictions are going to be fairly accurate if we don't have to deal with tariffs. So let's get right into it, and I can start showing you some charts. All right, let's kick it off with the CREB forecast that took place just towards the end of January with Anne-Marie Laurie, our chief economist. Here's the big heading right here. Calgary's housing market is expected to stay strong in 2025, with sales forecasted 20% above long-term trends. So if you look at this chart right here, and I'll just make it just a little bigger, you can see that this goes all the way back to 2006. And you can see in 2006 is where we got a little around 27,000 sales, and we never ever hit that again until 2021. And we've been enjoying in Calgary some pretty high sales from 21 all the way to last year in 2024, and you can see the expectation is we're going to be very, very similar to 2024, which means we're going to be sitting somewhere probably around 27,000 sales on the MLS. Now that's great for us as far as sales volumes go, but of course the big question a lot of people have is, well, what about the pricing? Are we going to see some price growths, or are we going to see some price softening? And I'll get into that in just a moment. But let's also look at the annual average months of supply. And this gives you an indication right now as to what's going to happen on pricing. And you can see that a balanced market is around 3-month supply of inventory, meaning that it would take 3 months for everything to sell if nothing new came on the market. And you can see that one of the reasons we've had such strong price growth is we just haven't had enough supply in the last few years. In 2022, averaging 1.68-month supply. That's just not enough inventory to meet the demand. 2023, 1.35 and 1.59 in 2024. So it's expected that we're going to be still hovering around 1.5, maybe 2 months supply in 2025, although you'll see very quickly that we have increased our supply quite a bit recently. And believe me, that is a good thing. Balanced markets are a good place to be. It's great because most people are selling and buying again in the Calgary area. And it's great when you're in a position where you can get what would be perceived as a good fair market value for your home, but also have a really good selection when you go to buy. Everybody likes a good selection when we go to buy, and it stops a whole bunch of bidding wars that were going on in 22 and 23, and that's just not a sustainable and really healthy market overall. So we'll show you what's going to happen there in just a moment. All right, let's just quickly talk about the risks, both the upside and the downside to our market. So the upside is tariffs, obviously don't happen, and there's no trade war. And we've got easing lending rates, which is already happening. The Bank of Canada has lowered rates again. It's making it really attractive. Inflation seems to be under control now at this moment, with no tariffs to worry about. we're in a really good position, especially for Alberta. We're better than almost every province in Canada right now, and our gross domestic product looks really good. Oil prices are good. Everything is really looking good. Like I said, just tariffs are the only thing that could be a thing to be concerned with. The downside risk, of course, is like they said, there's tariffs, and which could bring economic uncertainty affecting consumer confidence. And it's a well-known fact, if you're a buyer, you have to feel like this is really a good time to buy a house. And I have to say, I truly believe that it is. Even if tariffs do come, I still believe that it is, and I'll tell you why. Because first of all, for at least for Alberta anyway, the tariffs would be a small percentage, and that would probably be easily be passed on. Even though I'm not an expert on this, but I've been through a lot of different markets over the years. I've been through the downturns of 2008 and 2014 when oil prices really took a big dip. And it's not expected that oil prices are going to take a pretty big dip regardless if there's tariffs. So I think all in all, Alberta looks pretty darn good. And but in my personal opinion is I really don't think that we're even going to see tariffs for oil and gas. I hope I'm right, but that's just my personal opinion for what it's worth. And otherwise, we've got such good things happening in Alberta, and I'll show you a little bit more here right now. So if you look at our Alberta growth domestic product, it's expected to be at 2.5% in 2025, and they're expecting that the oil prices are going to be hovering in that $70 range, $77 range, and that also is very, very good for Alberta. So we look at everything that it could possibly affect real estate, and what we put out for a gross domestic product is obviously very important because that affects the ability to have jobs in Alberta, bringing a lot of money into the province, and that has a spillover into just about everything. So it says, looking ahead to the 2025, employment levels are expected to grow by 2%, driven by gains in construction, retail trade, healthcare, and education. At the same time, easing migration is projected to slow labor force growth and prevent further increases in unemployment rates. So you can see that the unemployment rate is expected to be about 7.8%. And employment growth about 2.3%, which is a little bit down, but we've got all these sectors that they are expecting to do very well. So population growth, and this is always good to watch, and people tend to focus on this, but I'm going to mention this. There's, because we have 1.5 million people living in Calgary, there's a tremendous amount of people who are in their 20s, hitting their early 30s, and they're at that age where, they finished school or they're in the trades and they're now, in their jobs and they're making money and they're looking to buy their first home. There's a tremendous amount of people now late 20s and their 30s having children, and all have a demand for housing and, and buying homes. So, we look at population growth. They always talk about the people moving here, but sometimes we forget how many people that are already here that now want to buy a house, or all the people that moved here in the last say 12 months to 24 months who are now maybe settled in, have a job, save some money, all and ready to buy a house. So to me, that's all included in what's creating the demand for real estate in Calgary. Now, that said, they're expecting a 3.1% population growth, down from 5.6. I don't think that's a bad thing. I think that's a pretty healthy growth amount that's expected to come here. But look they're still expecting to have, some provincial people coming here, Ontario, primarily, and British Columbia, and then the international net migration. So, you can see that Alberta definitely still has a lot of people looking at it coming from other places, and it looks like 2025 is going to be another strong year. But let's again not ignore all the people that are already here that need housing. Now, the one talk of the town that's been for quite a long time is housing affordability. And we all know for that to happen, what we really need is a bigger supply and a bigger amount of choice. And this chart is really showing you that in 2025, increased housing supply from new homes is expected to ease pressure on resale home prices, even as new homes start slow and the market rebalances. And this chart is showing the amount of new construction that is underway. And you can see there's 23,755. That's quite a bit that's happening, and you can see the percentage of the new construction market. To my surprise, 23% in the Northwest, because there's a lot going on around Fish Creek as well and in the Southeast, but definitely a high demand into the Northwest. So you can see there's a lot of choice in these different areas, and I'm going to just throw a little piece of information in here for you. A lot of times people don't think of hiring someone like me to help them with new construction, and I'm just going to throw in a little self-promotion. Um, I can tell you, I've really saved a lot of people a lot of money, time, and headache in dealing with builders, just because builders, you got to remember, they don't work for you. And they don't get me wrong, they do want you to have a good experience. They do want to make a good product. But if they can make a few extra dollars out of you, they're going to. There would be some things they may not necessarily voluntarily tell you about that could be a little bit negative that you may find out later. Someone like me is there to take the journey with you and point things out that you should know, even in terms of resale value for when you go to sell down the road. A lot of times a builder doesn't think of that. They just build what you want. So there's a lot of advice I can give you. So I'm just throwing a little self promotion in there. Just do yourself a favor and reach out to me if you're thinking of new construction. Even if you still decide to go along on your own on the journey, I can give you some advice that will be very helpful. So just consider that. All right, rental. Interestingly enough, even though we're talking about home prices, we have for people who are looking to buy property as an investment. If you're watching this video, we have an interesting time going on right now. We have some higher vacancy rates, and we're actually seeing some easing on rental prices in the midst of the prices going up. I've not seen that in all the years that I've done this, but there has been a lot of product that have been built specifically for rental, and there seems to be a lot of condominium that has been built and built for rental, and there really is only a certain amount of people that want to rent a condominium, and it makes me wonder if maybe we've built just a little bit too much, and maybe we have some products that are maybe too much on suburbia for rental purposes only, which is causing a little bit of vacancy. But that said, look at downtown, 6.9%. So you have to be smart about this if you're going to be buying real estate for the purpose of rental. I also, because I own the brokerage, I have a rental management division to our brokerage. We manage a lot of properties both in Edmonton and Calgary, and I can give you some great advice on what you should be buying, where you should be buying, and and give you some numbers that might be very helpful. Because one of the things that I've noticed with builders right now is they're giving people numbers that are not accurate. Like, we'll build you a two-story with a legal suite in the basement, and we can get you $1,700 a month in rent for the downstairs. I've seen that with some builders, very over-exaggerated, and there is a tremendous amount of basement suites on the market for rentals, because a lot of people had this idea of living up and renting down, and they're disappointed at the rental prices they're getting for that. But there seems to be a lot of supply, so just something to really think about and keep in mind if you're an investor. Okay, the last part about what's going to happen in 2025, and this is a little bit of what went on in 2024, and it's expected to see more of the same when it comes to what areas of the city seem to be doing the best. Or we're looking at the detached housing market. So you'll notice 5 to 9% increases were in this area up in the north. You notice in the northeast we've seen 10 to 12% increases. And of course 10 to 12 or 5 to 9% in this area here too. Sorry, let me rephrase that. It was 13+% in the northeast in dark, and 10 to 12% in this area here, and another 5 to 9% in the southeast. So really, there is strong demand in all areas of the city, but it is a little surprising to me that the northeast has gone up the highest. The demand seems to be really, really high here, and I don't even understand all of the reasons. Now, I do know that we have a lot of different people living up there from different ethnic backgrounds, and we have a lot of mosques and temples and whatnot. I think there is a lot of people that want to be close to these mosques and temples, which would make sense on that level, and maybe that's one of the things that's driving up the prices as well. But it's always interesting to me and trying to really understand some of the reasons why these markets move as quick as they do and go up as high as they do. But anyway, that being said, if regardless of what area of the city that you're looking in, this gives you a bit of an idea of what you can expect for pricing. 682 up north, northwest 782, 957 in the west, 941 in the city center, 719 in the south, and 716 in the southeast. And if you're coming from Regina, that might look like some pretty high prices, but if you're coming from Ontario or BC, we still have some pretty good value for detached houses in Calgary. So you might find this chart a little bit interesting is that in the south, we saw 21% of all the detached houses that sold. So we did 12,415 on the MLS, but 21% in the south, 14% in the southeast, 13% in the northwest, 14% in the northeast. So interesting to see how how the city has divided up the percentage of people looking in these different areas. So a little bit of self promotion again too, just because I have a lot of experience in this. Everyone, when they're buying real estate, if you're buying it to live in, of course you want to find the property that makes most sense to you and your family. But I don't know anyone that doesn't want to think about the resale ability and the potential for price increases, knowing that you might sell it down the road. Super important to think resale when you buy. Even for the people who think it's going to be their last house, I can promise you, sometimes things change. And the last house that you're going to buy, sometimes 3 years later, for whatever reason, you're finding that you have to sell this house, and you always want to think about that when you're looking at real estate. So these kind of stats, I pay very close attention to them, and I look very hard when I work with clients as to what kind of properties that a lot of people are looking for in the different locations, so you at least go in with your eyes wide open and you understand what is the resale ability of the house that you're looking to buy. So these charts do make a difference, and I think everyone should pay attention to them. All right, so here we are looking at January, and we're off to a pretty good start. If you look here in 2024, we did 1,649 sales in January 2024. We did 1,451 last month in Calgary. So we're down about 12.1% in sales. And if you look at the new listings, 2137, we brought on 2896. So having 35% more inventory, believe me, this is a good thing. This is not a bad thing. So this past January, we're having 3,639 listings compared to 2,158 last year. That is a pretty healthy amount. Like, we're now getting closer to what I would say normal levels. Normal levels are getting into more like about 4,000 to 5,000 listings on the market. But you can see right here, we got 2.51 months supply, and that's good to see that. And if we're hovering around 2.5 to 3%, that gives us a pretty good balanced market. So it means that prices are still rising at a modest rate, but we've got pretty good demand and a pretty good selection. So we finished with a benchmark price of $583,000. So that is a change of 2.79% year over year, and that's fairly healthy, and that includes condominium, of course. All right, let's wrap up this video by just quickly looking at some of the rural markets as well. Airdrie, last month, they had 112 sales. Chesimir had 56, Rocky View 108, Foothills 65, Mountain View 34, go down to Bighorn at 27, which is primarily Canmore. And if you look at the median prices, It gives you an idea. You know, Calgary is sitting at 572, but look at Airdrie at 566. Not a big difference between Airdrie and Calgary, and it used to be a big difference, but not anymore. Look at Chestermere at 645, and that's more expensive than Calgary. Rocky View, of course, would be, but that has a lot of acreages in there at 645. Same with Foothills, with a lot of acreages. Um, and of course, if you get down into Bighorn, it's mainly Canmore, you're at 1,150,000 because that's just a different market altogether. But, you know, there's a pretty strong desire for people to be in some of these surrounding towns, even Cochrane, Okotoks, Strathmore. It's amazing how many people want to live in these suburbs, and I really think it has to do with COVID and you know people still having hybrid and the ability to work from home. So these markets are healthy. The demand is there, but it definitely people aren't going there as they once did to save money. They're primarily going there now because they really want the lifestyle that maybe a smaller town has to offer, but still has all of the amenities. So I'll just wrap up this video by saying this. I'll summarize it by we're off to a very good market in 2025. I really think that as we come into February and March, which really is officially the spring market, we are going to see some continued listings coming on the market. Typically, people want to move when the weather gets a little warmer. So if you're thinking of buying, you will see more inventory hitting the market, but there's going to be demand for that inventory as well. So it will get absorbed. But it is a good thing because from a year ago, you're going to be seeing just a lot more selection. So you're in a position if you're buying, you'll be able to take your time a little bit more. I can tell you hands down, if something really good comes up and it's priced right, it still could sell quickly with multiple offers. Don't think for a second that it won't. So you need to be smart about your decision making. Some cases you can take your time and think it through and really analyze it. Other times you really need to make a decision quickly if you want to get into the property that you come across that you really like. If you're selling in this market, I can't say enough about pricing right now. Now, these city assessments have come out, really adding a lot of confusion to our market. I will tell you hands down, some of these city assessments are a little bit out of whack. I've seen some as much as $100,000 more than market value, where some houses that are literally similar, same location, same size, everything, and their $100,000 sale price is lower just last month. So the city can make mistakes on this. You have to remember with city assessments, they did not come in your house and do a proper evaluation. They do a very general area, a very general look at the market in your area. So be mindful of that. Please don't be attached to your city assessment if you're thinking of listing your home price. Make sure that you work with an agent and look at similar recent sales that have just happened and do a proper evaluation. The city assessment is a factor, but just be very careful not to be too attached to those numbers that you're seeing. And obviously, pricing is super important. Remember, the biggest fear any buyer has is paying too much. The biggest fear any seller has is selling for too low. That's what really creates the market. And once again, my invitation is always reach out to me with any questions. I'm always so happy to help, even if you're not looking to sell anytime soon or buy anytime soon. You're just trying to get an idea of where things are at. Talk to you real soon and look forward to the next video next month.